Hi, I'm Nick Werner. I'm a staff auditor on the Walmart engagement, and today I'm just going to take you through a brief introduction about Walmart, some of the important topics related to the audit. After that, I'm going to go through the fraud triangle and lay out kind of some of the factors that we looked into to see if there's any potential for fraud in the company. And then finally, I'm going to discuss some of the other relevant factors related to the risk analysis. After that, I'm going to pass it off to one of my other teammates who's going to take you through a little bit of a deeper dive into what we were able to find in our audit of Walmart. So, Walmart was founded by Sam Walton in 1962. It is a retail business that focuses on selling affordable goods to consumers. Um, Over the course of the last 50 or 60 years, Walmart has increased their revenue and their amount of physical stores dramatically. However, during fiscal year 19, Walmart really started to increase their e-commerce website and e-commerce production dramatically. One of the big factors related in their e-commerce introduction in fiscal year 19 was the fact that they acquired Flipkart, which is a Indian-based e-commerce platform. Additionally, one of the other things to mention is that Walmart led the world with highest amount of revenues in fiscal year 19 with right around $515 billion worth of sales. Just an incredible feat. Additionally, one of the things we wanted to point out about Walmart for fiscal year 19 is that right at the end of this year, they mentioned that they are going to stop selling e-cigarettes and guns, which we feel may play an important factor moving forward. So it's something to think about for our audit that we will also be discussing later on.
Hello, my name is Baruni Choi, and I am a staff auditor on the Walmart engagement team. Just want to start off by acknowledging some risks at the financial statement level for Walmart. So, first, Walmart reports their inventory at a LIFO basis as opposed to a FIFO basis. And they even go on to say that the LIFO and FIFO numbers are comparable. So, as an audit team, we would just want to make sure that that is indeed the case. Because if it's not, then that can have some uh, implications down the road, especially when it comes to taxes. So, if they are reporting LIFO and that then decreases materially the taxable income, we just want to make sure we acknowledge that. Another financial statement level risk that we want to consider is related to the closing down of Sam's Club locations, as well as the sale of Walmart Brazil. These changes represent one time large scale restructuring changes in Walmart. So, as an audit team, we want to make sure that the transactions they're in are not just accurate but also related. Finally, we want to consider the financial statement level risks in relation to the acquisition of Flipkart, as Nick mentioned earlier. Because Flipkart is a product that is based overseas, we as an audit team are concerned about the valuation of the acquisition as foreign exchange rates are involved. With that said, there is a similar concern when it comes to the sale of Walmart Brazil.
Hey, how's it going? My name is Miguel Rodriguez, and I was staffed into the audit project of Walmart. And I will be taking you over section 3, 4, and 7. Section 3 is based on calculating materiality and tolerable misstatement. 4 is identifying significant accounts, and 7 is going more in depth into those significant accounts. So let's start with section 3. Section 3, calculating materiality and tolerable misstatement. In order to properly calculate Walmart's materiality, we had to review the most recent 10Q, which was filed September 6, 2019, and the most recent 10K filed March 29, 2019. We decided that the company's pre-tax net income was the least volatile among the 5 accounts that we listed in the appendix below. Therefore, we selected pre-tax net income as a basis for our calculation. Given that Walmart is a publicly traded company, we set the percentage at 3% of their pre-tax net income, which is the most conservative amount. So based on the pre-tax income amount on the income statement, we determined that materiality would be $343.80 million. In relation to tolerable misstatement value, we set a range of 50 to 75% of overall materiality. So that turned out to be $171.9 million and $257.85 million, respectively. So Section 4, identifying significant accounts and disclosures. So we have identified the balance sheet accounts in the appendix as significant accounts. Each of these accounts have either exceeded the tolerable misstatement or have fluctuated dramatically over the past couple years. We're also classifying significant accounts as those accounts that were affected in the acquisition of Flipkart. For our financial statement disclosures, we've considered each of the following: the amount disclosed in each of the accounts, the nature of the disclosure, and the accounting reporting of the disclosure. We also determined risk of material misstatement based on the volatility of each account.
Hi, I'm Kevin, and I'm going to summarize our findings from risk assessment and analytical procedures. In order to calculate the proper risk assessment for the audit, we create both a horizontal and a common size analysis of Walmart by reformulating the financial statements in order to depict various aspects of the business more accurately. The data that we used to come to a conclusion came from 10 cases over the past 4 years. To summarize, we believe that Walmart may face the risk of declining profitability and increased solvency issues moving forward. Below are some of the important findings from our risk assessment and analytical procedures. By analyzing the balance sheet, we found that the common size for total liabilities has increased every year from 60% to 67%, while the common size for total shareholders' equity has decreased from 40% to 33%. This indicates that Walmart's leverage percentage has increased over the course of the past 4 years. The ratio for financial liabilities and net financial obligations also increased significantly in 2019. Both of these factors may lead to a risk of potential solvency problems in the future. By analyzing the income statements, we were able to come to the conclusion that the common size for net income attributed to common shareholders has decreased from 3.5% to 1.3%, which may indicate a potential profitability risk moving forward. By analyzing the cash flow statements, we noticed that the common size free cash flow has decreased from 10% to 2%, which is also consistent with our findings in the income statement analysis that there may be a potential risk of profitability moving forward. By looking at the profitability ratios, we were able to come to the conclusion that return on equity has nearly cut in half over the course of the past 4 years. We took this one step further, breaking down using the DuPont analysis model, and we were able to find that the decrease in ROE is mainly due to an increase in net borrowing costs as well as a decrease in the overall profit margin at Walmart. We also noticed that the net financial expenses has increased dramatically each year. These results combined are consistent with our previous analysis that there may be a potential risk of profitability moving forward. Looking at the solvency ratios, we noticed that the total debt to equity ratio has increased from 1.5 to 1.8, which is also consistent with our previous analysis that there may be a potential risk of solvency in the future.
In looking at the fraud triangle, the 3 factors of a fraud triangle are rationalization, pressure, and opportunity. One of the big things here is that Walmart seems to have really solid internal controls, and by that I mean they have open door policies and they have specific related party transaction regulations for the higher ups. Additionally, in terms of rationalization, that comes from a tone at the top, and their current CEO seems like a really good person. He has openly commented on negative practices that have occurred in the past for Walmart and how he plans to implement positive change in the future. So based on those factors, and pressure, every retail business has pressure mainly due to the fact that they have other companies that they're competing with. There's a low barrier for consumers to switch from one retail company to another. So there's always going to be pressure to try to get that consumer. However, Walmart, we feel as a whole, has a very low risk of fraud.
Now we're looking into Section 7, recommendations for the preliminary assessment of risk of material misstatement for each significant account and relevant assertions. So when we look at the appendix, you can see that we chose out 9 different accounts that we considered to be significant. Amongst them, cash, PP&E and long-term assets, receivables, net is going to be very important, equity, inventory, goodwill, property under capital lease and financial obligation, long-term debt, and short-term borrowings. We can see that we listed out the assertion for each of these accounts, and then we decided, based on the volatility and the fluctuations over the past couple of years, what would be the appropriate indicator for the risk of material misstatement. As you can see, for cash, it was very high, PP&E was medium, receivables is high, of course. Walmart being a retail company, we have to take into consideration the receivable amounts. This is mostly because it's a judgment call, so us as auditors, it's our job to make sure that they use the proper evaluation methods. We also decided to look at inventory, rights and obligations, and this was going to be an important one along with long-term debt and short-term borrowings just because of the acquisition of Flipkart. We have to make sure that they use the proper equity method and use proper fair value measurements in order to evaluate their investment. As you can see in the appendix, we also listed out detection risk. Detection risk and risk of material misstatement have an inverse relationship. So if risk of material misstatement is very high, the detection risk is probably going to be very low. As you can see from the appendix, we have determined that 5 accounts have a very high or high risk of material misstatement. In the next section, one of my colleagues will be explaining each of those 5 individual accounts and what possible substantive procedures we would have to take place in order for us to properly test these accounts.
So let's now talk about the substantive procedures to reduce the risk of material misstatement for a handful of accounts of Walmart that we deem are riskier than others. And for each account, we will discuss the risk as well as how we as the audit team will mitigate them. So the accounts we are going to discuss here are cash, receivables, goodwill, and long-term and short-term debt. So for the cash and accounts receivable accounts, we want to test the accuracy, existence, as well as the valuation for these accounts because of the fact that Walmart is a leading retailer that is located in multiple countries. Naturally, foreign exchange rates will be involved, so we look to include subject matter experts in foreign exchange rates and foreign businesses to ensure that we are mitigating the risks here. For the goodwill account, we understand that this account is a little bit more complex because it involves management discretion and judgment. So we want to make sure that we pay extra attention to this account in light of the Flipkart acquisition as well as the Walmart Brazil sale. Finally, because long-term debt and short-term debt make up a large part of Walmart's financing cash flows, we want to make sure that we demonstrate a due diligence for these accounts by our interactions with the management as well as our interactions with lenders to confirm these debts.
Finally, there are 3 other factors to consider. There are 3 litigation matters going on. One is an equal value claim. Another is a national opioid litigation that Walmart was named a defendant in. And then finally, there was an FCPA related litigation that Walmart is currently dealing with. And these are all mentioned in the other factors because as of right now, Walmart is unable to put an estimate onto how big or how small the risk will be. And so with that being said, we feel very confident in their abilities to defend themselves